with the broker ATFX. And in this special presentation, we're going to talk a bit about what you need to know before you start trading. And hopefully after this, you will have a much better experience in trading as well. If you are on the edges and you don't really know exactly if you should be trading, you will have a better understanding. So I'm going to walk through a few different topics. And of course, if you have questions, you could just put them there in the little chat. And if I would lose any audio or any signal as well, put it in the chat there so you can let me know so I can make the necessary adjustments. Okay, good. So let's begin then, and we're gonna show you a few slides and provide you guys a little bit of an intro, because I do want to let you guys know why you should spend the next half hour with me. Okay, so we're going to begin by starting out then. And my name is Alejandro Zambrano, and I'm the, as I said before, the Chief Market Strategist with ATFX UK. And I'm also the chief editor at investingcube.com, which is the trading website I created. And that is there to help traders with education and news. We offer quite a lot of different things there, so you definitely want to check that out. I also do a daily, or I do webinars on that where I talk about the markets and more actionable things. So yeah, let's move along here then. And what are we going to talk about today then? So why people trade, how much you need as a capital to trade, how much capital, how much do you, it's noted here, I have a double here. So how much capital do you need to trade? So how much money do you need to do to start investing in the markets? The different markets you can trade, difference between trading and investing, pros and cons of the different markets, and also tips on how to improve your trading experience. And after that, we're gonna wrap things up and show you guys how to actually place a trade. So let me see here. There we go. Whoa. Let me see here, just a second. There we go. That's about perfect there. Okay, good. So who am I? I'm Alejandro Zambrano, and I'm the Chief Market Strategist, as I said, at ATFX UK and Investing Cube. And I've been trading since 2006, and I probably tried pretty much all different strategies that are available there. And that brings me to where I am today, which is someone that's been trading for many years and someone that actually found what works for them. So since 2014, I've been making money in my trading, and I spent many years actually trying to figure things out, 8 years to be exact. And in the beginning, I didn't know nothing. I had very little. I just knew a little bit about macro fundamentals and news. That was pretty much it. And then after that, I learned more and more and more, because it was actually quite interesting. Is that when I started really much in the beginning, I had really good success. So I actually made some 40% of my capital in just a few months. And I remember, because I was 20 at the time, and I was living with my parents, and I remember how it was like the big day of the month, which is what we call the non-farm payrolls day. That's when the labor market figures from the US are published. We're talking about the non-farm payrolls and the unemployment rate, sorry, how many jobs are created, how has salaries increased or decreased in the month. And it's an event that creates a huge amount of volatility in about half an hour, 1 hour's time. And I remember trading it and how I was making, I think at that point I made maybe some 500 euros really quickly, because I started with a euro account. And I was like, oh wow, is this how my life is gonna be? I'm gonna trade for half an hour and make 500 euros. Obviously super excited, but I was 20 and I didn't really know too much about the market. And it started really good. I started doing that, and then I started to do different things. And then when I started to do different things, but also when I was using my main strategy, sometimes I would lose money. And the reason why I made 40% really early on is because A, I didn't really know what I was doing, and I was trading with way too much leverage. And that's something that everybody does. And from there, I realized, because I made some decent money in the beginning and then I started to lose, and I realized this is not the way to do it. It has to be in a properly structured way, and that's when I changed my perspective on things and started to read up. And you might be exactly where I am right now. But what happened afterwards is that I spent a good 8 years trying to figure things out. And I can tell you exactly why that was an issue and why it took so long time for me. So after this presentation, hopefully it will not take 8 years for you guys to get things going. Maybe you can do it much quicker. But with everything else, guys, remember, like everything, if you want to get into any trade, you need to study a year, 2 years, and it's something similar here. Not that you need to study every day, but you need to look at the markets and spend time looking at the markets before it clicks for you. So let me see here as well if audio and visuals are okay. You are most welcome. Just put any questions there. You can also just say hello. It's always nice to see if anybody's here or if I'm speaking to myself. Actually, obviously, I can see that some of you guys are here, but it's always good. Let me see if I can expand this. All right. We have Razvan saying hello. Hello. Thank you so much for joining me. Okay, good. All right. If you want to say hello, guys, just put it in the chat. Okay. So let's begin then. So I'm representing a broker, by the way. It's called ATFX. Now, ATFX is an FCA regulated broker. We have headquarters in London. Worldwide, we're some 400 people, but ATFX UK is its own company that uses the name ATFX, which is shared with many different entities across the world. And that big entity is about 400 people. And obviously, they're independent companies, but sort of the offering that we offer is the same, well, pretty much the same. Um, and all the skills within the group is used. And what they do is that they offer trading in currencies, indices, stocks, and cryptocurrencies. And what makes them different compared with many other brokers is that we do things like this. We do webinars to help people get going, to help people reach their targets quicker, really. Whereas many other brokers, yeah, you won't pay nothing to trade. You will sign up really quickly, but then that's it. And they're not really going to give you any help, especially not if you're losing. So, so that's the trick here. Or if you have a small account, for example, we don't do that. What else? Before we start, I need to show you this. Yeah, it's a little bit like when like many other things in life, like smoking cigarettes, for example, it will say there this can give you cancer. It's something similar here. And trading currencies or is high risk. Trading stock markets is high risk. So trading CFDs, which is sort of a way of trading all these different markets, is complex. And 67.07% of all people that trade with ATFX lose money. That percentage is actually relatively low compared with many other brokers. And we're going to talk a little bit more about so you ensure you're not at that, belong to that 67.07% of people that lose money. All right, so let's begin then. Let's just dive straight into the main part here of the presentation. So everyone is a trader. I found this quote online. Everyone is a trader. Some trade time for a paycheck. Some trade risk for a living. Traders do that. They trade for a risk. Many times when the markets are collapsing, people are in fear. The speculator, the trader will go in and they will buy at that time because you have people that just want to get out of the market. And obviously, when they do that, sometimes they do it irrationally, which pushes down the market substantially. And then the speculator comes in and buys that, and with the hopes that this is going to go up. Not always. Sometimes it doesn't work, of course. And sometimes also what the speculator does is that he will look at a market and he thinks, hold on, why is this trading at these levels? We have a coronavirus crisis. Why is like this currency trading at elevated levels? It shouldn't be trading here. Speculator goes in and tries to put a position on to make money on that currency going down. And will the currency go down? It will go down if it makes sense that it should go down. So that's sort of the role of the speculator. He tries to go in there and find things where things are not matched well, where with the asset of the price doesn't make sense with what's actually driving it. So that's sort of what the trader does. What else? Why do people actually trade? Uh, Many people trade because they have an extra income, right? You have your day job, and maybe you see that you can't progress the way you would like to progress, or you just want to make quicker money faster. For example, you have savings and you want to put them into work. Then trading is something that may potentially work for you. There's a saying which is the poor people uh, work for money, and the rich people have their money work for them. It's something similar here, where you would put your savings into work instead of just having them in a bank account. Because if you have them in a bank account nowadays, they're not going to get any sort of interest rate in return on that. What else? Some people do it to replace 9 to 5 jobs. Obviously we don't commute anymore, especially not in the UK, England, where I'm based now. But people are tired. When we do go back to normality, and I do think we are going to come back to normality, people are thinking that it's going to be like this forever. As soon as we get that vaccine out, people are going to be required to go back to work, I think. There's a lot of things missing out when you can't interact with people, and a lot of deals, I think, being missed out. So a lot of people don't like that. A lot of people, for example, in London, they live outside of London because it's too expensive to live in central London. So they need to take a train for an hour or 45 minutes, which is packed. People don't like that. Or maybe they were made redundant, or maybe they have like property portfolio or a company that doesn't need too much attention and they have spare time to trade. That's why some people do this, because there's some benefits with trading, and the benefit is that it's not like your 9 to 5 job where you have to be at your desks unless you want to. You can actually choose, and that is something that appeals to people because they can trade a few hours in the morning, a few hours in the evening, and then that's it. Some people are specialized just to trade the beginning of the London session, which is where you have quite a lot of volatility. And then you have people that just do it for excitement. Are you smarter than everybody else, or you want to take advantage of the situation? Like, for example, recently we did have the coronavirus crisis, and stock market sold off aggressively. But as I said before, the speculator is looking at the market and he says, hold on, people are getting way ahead of themselves here. These companies shouldn't be trading at these levels. And then they bought, and in particular in the Nasdaq 100, it paid off aggressively. I think the Nasdaq 100 is up with some 50% or something like that. So um, massive moves, really. Okay, so what's the pros of trading? Okay, something you can do from home or on the go. There's a lot of things. You can trade on your mobile. I think trading on the mobile, yeah, you can do it. Some people do it. You see, in particular, younger people do it. But for me personally, trading from a mobile and taking a decision from a mobile is not really the way I would do it. I would do the analysis at my desks, and then I have my trading ideas. And then if I happen to be on the go and I get an alert, I can make a decision. I do that, but I don't necessarily do all the analysis in the mobile. But some people do that, you know. Um, and that's something that is good. You can do it from your home or from wherever you are, as long as the time zone makes sense. That's interesting. We can talk about that later. You can trade anytime during the week. You have the Asian session, and you have the European session, and you have the US session. So for example, currency markets, they're open 5.5 times a week. So they open on Sunday night, and then they close on Friday night. And you don't have to trade when you're working from your regular job. You can trade before, after, and you could even trade during if you have access to a computer. And some people do have access to computers at work, and they can trade it, but other people don't, and they can trade in the evening, so at night. The different times where you can trade. And I'm going to talk a bit more about that later, because you don't have to be in front of your screens. And that's the other bullet point here: flexibility on screen time. So there is you can, if you want to, spend a lot of time in front of your screens, but you don't have to. That's the beauty of it. And you also have access to leverage, which allows for rapid gains. That's probably what a lot of people get into the market. I mean, I was just studying finance, and I accidentally, when I was 20 actually, or 19, I started to work for a financial broker in my hometown, and that's how I got into this. But a lot of people, for example, they will go on Instagram, or they will know about someone that made a lot of money, and it's usually because they have the ability to use leverage, and people will use that. So you could, and particularly in the past, before the market was more regulated, you could technically, start with. I mean, you can still start with 500 pounds, $500, 500 euros, and you could effectively, make a lot of money. You can go from 500 to 10,000. So, for example, I think it was when I was working for another broker. There was a guy that started out with some 50,000 pounds, and then after a month he had 300,000 pounds. And another one which is even more crazy, which I didn't really believe myself until I saw the trading statement. But there was a former colleague of mine that had a client, like a Middle Eastern-based client, and he started with about $1 million, and he made some $14 million trading. And because of the leverage, you could do that. But the problem is this: if you're going to go from 1 million to 14 million in a short period of time, you might as well have just lost that million. So some people just have ridiculous amount of luck. But the possibility is there, though. It is there, and if you can harness the market, then it's something that you can work with. The other really cool thing is this: you can make money during recessions. That's a big, big plus. In fact, when you have recessions, when the market is just going crazy, like with the COVID-19, or in 2008, when we in 2009 when we had the financial crisis, or a few years later when people thought that the Greece would leave the EU, every time there is crisis and big dislocations, you have market volatility. So in fact, this is the time to trade when it's crazy, and you can make money during recessions. You can also make money when there's no recessions. It's just that the markets are much more slower moving then, and you will need to adjust. Now, what's the drawdown with trading then? Because it's not all just super easy, right? Well, the fact that you can make money really quickly because you have leverage also means that you can lose things really rapidly. Now, you're not going to lose everything you have in your account from one day to another unless you do some really silly stuff. And we're going to talk a bit about that. If you do that, then you can lose money. If you have no risk management as well, you can lose money really quickly. The same way as you can also just make a lot of money quickly. But that's the biggest drawdown, because us as humans, we have the tendency to be sort of greedy. We want to do things. We want it to go fast. We want everything faster and bigger, and so on and so on. You get the picture. And this means that we will have a situation sometimes where you just get too greedy for your own good. And the leverage gives you that, but it also gives you the risk. What else? Well, not everybody tolerates stress. Now, it's difficult to say how stress like this is going to influence you. Some people just don't like it. Some people are okay with it. Like, I am very good with stress. I'm stressed. I go to bed. I wake up the next day like nothing happened. Like, from that perspective, I'm very good at managing my mood, and that's maybe why I'm good at this. And not everybody, there are different ways of dealing with this. There are different ways of trading, and that could increase or decrease your stress. But not everybody tolerates stress, and that's the thing. That's also one reason why some people don't succeed. Uh, you know, um, to give a good example, people hate to lose money, right? Even if you lose 10 pounds, people are going to be upset. If you drop 10 pounds or 20 pounds, you're going to be upset. You need to build up that tolerance. Maybe today you get upset. Well, if you get upset with 10 pounds, maybe trading at all is not your thing. The thing is this though, is that when you trade, you will see big swings. So you will see your account up with maybe 1,000, 2,000 pounds, and then you might see that those 2,000 pounds might be 500 a day afterward, and then after that it can go up again. Or in worst case, it goes down. You had a 2,000 pound gain, which is now like a 1,000 pound loss. You have that market volatility, and not everybody is ready for that. But that again is something you can control. And then we have the discipline part, which is the other thing as well. Do you know how to, if you're disciplined, then yes, it's fine. Again, it's a little bit of difference because some people are disciplined on certain things, but when you put money to it, they change their character. Like you have, this is also something that's been seen in many different other settings. Like you have in a classroom setting, when you have children or just humans, just normal people, you have someone that could be the joker. But when you tell him, okay, joker, now you're gonna be the team leader, you're gonna manage this group, then suddenly they become different. And it's the same a little bit thing here with trading as well. And many people, when they have money at risk, their discipline will increase. They will take it more seriously. That's why, for example, I do encourage people to demo trade, but I also encourage people to not stay on the demo for too long. A demo trade is a virtual account, which I'm going to show you a bit later, where you can open and close positions with no financial gain or loss. And because it is like that, you will do some crazy stuff, and you can easily double your trading account. But when it comes down to real money, that changes. It's much harder to trade real money than trade on a demo account. Uh, what else do you need? Well, you need to have persistence and curiosity. That is something, of course, you need to be successful in anything. So maybe this is it. Maybe this is your time now to shine, unless you're already shining. Maybe you're shining and you want to shine even more. But you need that persistence and curiosity. If you are someone that gives up easily, then trading, I can tell you right now, is not for you. But you never know. Maybe you're terrific at this. And that's the thing. Sometimes you just need to give it a try. What else? Limited capital could block you from trade full time. So I remember when I started, and even a few years after that, and in particular from 2010, say 2014 actually, up until recently, there was this thing within all the traders that everybody just wanted to quit their job and just trade full time. There are issues with that, and it does require a bit more money than one might think. Uh, Again, there are some people that are super good. They start with 10,000 whatever, and then they make a lot of money immediately, and then they can live on their trading. But for most people, it's more of an income stream. Making a few more thousands per year. Maybe it really depends on how you start, right? So we're going to talk about that, and we actually get a question by that from Maximo Pass. And Maximo is asking, how much was the minimum to start for trading for a living? So let's cover that then. How much capital do you need? So I put it here. You guys that know your Bible, or even if you don't know your Bible, you probably heard this before. You reap what you sow, right? So whatever you put into the system, you will get out. So if you put 10,000 into the system and you trade with normal risk parameters, and obviously not the first year necessarily, but say you have a bit of experience, you get hang of it, you did a course and you spend a few hours understanding, maybe from 10,000 you can grow it to double it. So you do 100%, so you make another 10,000. But putting 500, which is the minimum, and try and think that you're going to go from 500 to 10,000, that's going to be requiring huge risk. So that's why I say you reap what you sow. Now the minimum with a broker like ATFX is 500 pounds or dollars if you want to trade with ATFX FCA. And again, you can start with that, but you can start with that if you wanted to, just to give it a try. But to make some serious money, you do need more than that. And with a broker like ATFX, what happens is that when you do add more money, the cost of trading comes down. And as well, you unlock perks like trading education and coaching. For example, I provide coaching. I used to do a premium course. So that's how much capital you need. Like minimum is 500, but realistically, you need a bit more than that. Now, there is a thing that says you shouldn't risk what you can't afford to lose, and that's really important. You should never put money or borrow money or do anything like that. You should never put money at risk that's going to change your lifestyle. Like I have my trading account, and I have a significant amount of money on it. But if I lose it, it doesn't mean that I need to move out from my centrally located London flat that I bought. I'm not going to have problems paying my mortgage. I'm not going to have problems with my son's nursing fees. That's how you need to think. Some people, of course, they like to take risks, but you should never put money that you can't afford to lose. But you do need a bit of money, like maybe, I don't know, a month's salary or something like that, 2 months of salary. I'm not saying you have to build up to that and then open an account. You can open up with smaller money. But if you want to, as I said before, you know, you can do 100% a year. You can do 50% a year. You can do 30% a year. Some people that get it really, really lucky, they'll make 400%, 500%. Maybe you're gonna be that person. I'm not sure. But if you're trying to be that person that wants to make 500% a year, then it's more likely that you're not gonna be that person. It's more likely that you're gonna be the person that loses it all. So that's the balance you need to try to find. So how much can you make then? Well, some people are gonna double their accounts and make a living at it. Some people do, but a majority of people unfortunately lose. So in the case of retail traders with ATFX, 67% of these people lose money. And how can you do that then? How can you maximize the likelihood of being a profitable trader? In the beginning, I was going to write, how can you make sure you don't belong to the losers? Well, how can you ensure that then? Well, you educate yourself. Well, congratulations, you've done the first step here. We're talking a bit about the markets today, and I'm going to show you a few more tricks before we leave. But yeah, you educate yourself. You spend some time reading. You develop a proper trading plan. What's a trading plan then? A trading plan is something that tells you when to buy and when to sell. You use money management systems. So how much you're going to risk? Imagine you start with $1,000, and should you put 500 on one position, one trade, or should you put maybe 100? That's money management. The better your trading plan is, the more can you risk. Many people that start out and lose and belong to this 67.02%, they don't have any money management, they have no education, and they have no plan at all. Another little thing is to trade with less leverage. So don't be too aggressive. Take it from the longer run. And then the other thing is to minimize short-term trading. So we're going to talk a bit more about that. Now, there's something here that I didn't cover, and I mentioned it already a few times. I talked about leverage. So what is leverage? Imagine you're going to buy a house, and the house for this is, or a flat, it's $100, $100,000, or 100,000 pounds, whatever currency you prefer. And many times when you buy a place, you can have a mortgage, right? So what happens is that with a mortgage and a deposit, you can buy something. So for example, you have $10,000 as a deposit, and then you borrow the remaining 90,000 from your bank, and then you buy your place, and then over the next 20 years, 30 years, you pay back the 90,000 that you own. Now that is leverage, because with your money, you can control something that is much bigger. In this case, 100,000 divided by 10,000, that's 10. So that's your effective leverage. Now, when you trade currencies, for example, you have up to 30 times leverage. What does that mean? Well, if a currency goes up with 1%, in your account, you could make 30% return. So on a day when the currency moves with 1%, you can make that. So for example, I think the average change in a currency nowadays is about, say, let's make it super simple. Let's make it 0.5%, but in fact, it's a bit higher than that. So it's a 0.5%. So if you would trade with maximum leverage, that would result in your account, and you would buy from the very low at the end and sell at the very high at the end, you would effectively make 15% return. Now, 15% return, that's a huge percentage return if you think about it. Because if you go to your bank, you're not going to get anything. And if you put your money on the stock markets and don't do no leverage, then the average return is about 9% in the S&P 500. In the FTSE 100 is lower. So you could, if you wanted to, and if you really nailed it correctly, you could technically, whatever you get in a stock market for almost 2 years, you can get that in one day if you trade currencies. The problem with that though is that if you don't buy at the very low and sell at the very high, you could technically lose all your money in one day. So that's the problem with leverage. But that is leverage. Now you know a little bit more about that. How much money do you need? So 1 hour a week will allow you to position trade. You might ask yourself, what is position trading? Position trading is when you hold positions for a few weeks or months. So effectively, after this excludes any education you would do. So imagine that you read up on the weekends whenever you have time. You spend up reading a bit, and some systems, you have a system, or you watch my premium course that lasts 4 hours, and then you want to give it a shot. Then you could technically, if you wanted to, like once a week. Some people do it on Fridays, some people do it on Saturdays, some people do it on Sundays, or whenever you would sit down and then you will look at all the information, and then with the help of something like the ATFX MetaTrader, you would be able um, to to put orders in the system that will trade for you based on your instructions. That's what you can do once a week. Position trading, which means you hold positions for maybe 1, 2, 3 weeks, or possibly months. If you have 1 hour a day, it doesn't have to be 60 minutes in one go. It could be 30 minutes in the morning and 30 minutes in the evening, or 30 minutes in the morning and 15 minutes at lunch and 15 minutes at the evening. You could day trade. Day trade means that you buy in the beginning of the day and then you close the position before the end of the day. That's day trading. With that time as well, you could do what we call swing trading, which is when you hold the position for a few days. So you can call it intra-week. So that's what you can do with 1 hour a day. If you have 2 hours a day, then you can do what we call scalping. Scalping is when you enter the market and you hold positions for about 5 to 10 minutes, sometimes a bit longer, but it's usually just the losers you keep for that long. So a lot of people go in, the market moves a little bit, and they take that profit. Then they go inside and they take that profit. Now, when I started trading, I did a lot of day trading and a lot of scalping. And that is one of the reasons why it took so long time for me to trade good. As well, I was trading with too much leverage. Because when I started trading, I started with about 2,000 euros, and this is in 2006. And back then, you had less flexibility. Like now, you can choose more in detail how much risk you want to take. Back then, the minimum size was 10,000 currency units. So 10,000 over 2, that's 5 times leverage. And I was trying to stick to a very low risk profile, and that's why I had issues. Okay. So, okay. So I'm just looking at one of the questions here. So just back. If we look at this again, then what you could, if you go into scalping is short-term trading. When you go into the more short-term, you have more opportunities. There's no question about that. Yet with more opportunities and more random noise in the short term, there's high risks as well. What does that mean? Well, you could be buying today or right now because the market is going up, and then President Trump says something, or somebody else says something, or some economic data comes out, and suddenly everybody has changed their mood, and what looked like a perfect buying opportunity in the short-term charts suddenly turns into a loser. And then fast forward a few hours and everybody's buying again, like if that comment didn't matter. And it's true. In the short term, the market is going to do a bunch of silly stuff. So what I started to do is I trade for a few days, sometimes up to a week. And I don't really day trade anymore. I open a position on a Monday, and if it goes good, I'll keep it open for a few days, sometimes up to 2 weeks. And that's something that helped me a lot. Whereas in the beginning, I was doing a lot of this. And the more short term you are, the higher the risk is. So, but that's also where most of the money is in the short term. So what can you do about that? You can give it a try. And if it doesn't work, you can trade longer term. Okay, got a question here from Maximo. Do you do mostly FX trading? I'm thinking on trading on options only. All right, so I have a good experience of options as well. So to understand options, you need to understand FX trading. So an option is a specific product that comes from, it's from the same family, so to speak. So the thing with an option is that you need to be okay, look at it like this. If you're gonna buy a currency, you're gonna buy the euro. You need to be right about the entry price, and then you need to sort of figure out, are we gonna go up or down? So you need to be right about the trend, and then you need to make sure that it goes up to your target. Yeah, so you need to be right about the trend. The problem when you trade with options is that you also need to be right about the direction, but you need to be right within a specific time. All right. So if you buy if you think for example, you think that the euro is going to go up, so you say, okay, I'm going to buy now. So you buy an FX spot. You can, as long as that position is not too big, you can hold it open for as long as there's money in your account. Yeah. So technically, you can have it open for 6 months, a year. With the options, you buy them now, and then usually it's like 1 week option, 1 month option, a bit longer sometimes. The professionals have an outlook for about 3 months, but unfortunately nowadays on the retail market, some brokers are offering like, where's the euro gonna be in the next hour, or where's it gonna be in the next 5 minutes? Because no one really knows what's gonna happen in the next 5 minutes. That's more of a gambling product. And so trading options, Maximo, could potentially make it harder for you, because you need to not only be right about the direction, you need to be right within a specific time limit. Okay, so what markets can you trade and how do they work? I trade many different markets. I don't just trade currencies. Over the last 2 years, I made most of my money in indices. So we're going to talk about that and all the other things as well. So you can trade currencies, commodities, indices, cryptocurrencies, and shares. You can trade all of this with ATFX. So you can trade like major currencies. A major currency is like the euro, the dollar, the Swiss franc, the Japanese yen. And then you can find a ton of combinations of these. And you can also trade smaller currencies like the Mexican peso, the Russian ruble, the Turkish lira. You can trade commodities, gold, silver, oil, indices. You can trade the German DAX. You can trade the S&P 500. You can trade the Nasdaq 100. You can trade the Chinese stock indices. Cryptocurrencies, you have Bitcoin, Ethereum, Litecoin, Ripple, and then you have shares, Amazon, Netflix, Alibaba, and so on and so on. So what's the difference between these two? Well, some of them are good for trading, which is when you hold positions for a short period of time, and some of them are better for investing, when you hold positions for much longer periods of time. So what's the difference there? Is the investment horizon, which I mentioned, short-term, long-term? Like some shares, they don't move. That's why I don't trade them. Some shares, you buy them, and then there's nothing happening. You go back 1 month later, it's at the same level. That for me is not an efficient way of putting your money to work. Of course, there's some shares that just move like crazy, but a majority of them don't move too much. And then you have currencies, which are the opposite. Like the problem with currencies is that you will buy here and you're up, and then the day afterwards, you're back where you started. And then it goes up, and then you're back where you started. So you can't really invest in currencies. You don't invest in them because they don't have a long-term trend. So you got the investment horizon and the way they operate. But then you also have the composition of the returns. A trader, he's looking for capital change. So you buy for 100, the market goes to 110. You did a 10% return, and that's your profit. You also have interest rates. So imagine, let's make it super simple. You buy an apartment, and the apartment costs $100,000, and this apartment will pay you $5,000 in income and rental income every year. That gives you a yield of 5%. So the investor is usually looking at the yield component. They want to hold this asset and make money on the yield. The trader is in and out, just looking for the change in the price. So let's go back then. Currencies are good for trading. They're not good for investing. Let me give you an example of that. So we're going to open up the euro versus the USD. And you can see here, this is data from 1984 and up until now. So if you would have bought the euro in 1983, by the way, the euro did not exist then, but it's a something synthetic price here. Then at one point you would be down with 32%, and then at one point you would be up with 74%, and then you would be up here so you bought in 83, in 95 you're up with 74%, and here in the year 2000, so about 15 years later, you would be break even. And then here in 2008, you would be up again with about almost 90%, and then today you would be up with 36%. So you can see it's something you have to go in and you have to go out. It's nothing you can buy and just hold, because the market does not work like that. And that makes it great for trading, because if you do look at the shorter period of time, and you can see that this market goes up a lot, down a lot, up a lot, down a lot, up a lot, and down a lot. And that's what a trader likes, if he understands that and can manage that. You have commodities. Commodities are also not for in trading. They're not for investing. They're just for trading. So this is the price of Brent crude oil. So here in 1993, the barrel of oil was at $16 a barrel. And then it literally from 1990 all the way up till 2001, so for about 10 years, this was not going anywhere. And then it had a crazy move, and then it had a massive collapse. And then this is in 2008, this is in 2011. So a few years later, we went back, but we never went back to that high. And then it's been really wild. So this is also something you trade. You don't invest in this. You can invest in oil shares, but again, oil companies, but they look very similar. Indices. Indices are something that you can invest and trade. So let me see here. So this is something like, this is data from, I'm going to make this logarithmic. So here, if you bought here in 1986, the S&P 500 was at 200. Now it's trading at 3,150. So that's a return of 14, 14 times the money. There are times, of course, like here, like from May 1998, actually, here we had hit a high in August, in the year 2000, and then it was first in 2013. So for 13 years, it was within this range. So you can trade it and you can invest in it. And there are sometimes like this where the market does nothing for 13 years. Cryptocurrencies, they're good for trading. Some people might say, no, they're good for investing. Yeah, but if you're happy to, I mean, in hindsight, yeah, of course, you should have just bought and kept it. But a lot of people didn't. I'm trying to find a good crypto chart. Okay, here I only have data from 2012. So this was from a perspective here from November 2011. It was Bitcoin trading at $2.51, $2.50 per coin. And obviously here I can't even count this much, but you know it made some silly return, some crazy moves. So obviously here it has been going upwards, but here as well, you know the market was down with 88%. From its high, all-time high in December 2017, the market lost 84%. And for now, we're still down with 50%. 50% is a lot of time. So if you invested in December 2012, you're still losing money. So this one, I personally think, if you know technical analysis, you'll avoid all of this, and then you'll just trade these sections. And then you have shares. Shares are good for investing. That's what I think. There are some shares like Tesla, which you can trade more frequently, but most of the time you are not trading them. You're just investing in them. Because let's load Tesla. So Tesla is the special one, right? But even Tesla, if you bought here in April 2018, you know, okay, we went up, and then, but you can see there's some nice swings here. Like the market went up quite a lot, 50%. Okay, you should be able to hear me now. So sorry about that. It looks like I ran out of battery on my headset. Okay, good. Thank you so much for letting me know. Yeah, so you have the link for this. I strongly suggest you check it out. Again, it's free to use, and you can just download it. And let's see in the chat so we can send it to everybody. There you go. And you should definitely check it out. I'm going to show you in a few minutes. It's quite straightforward. You register, you download, and then you just set it up. Sometimes the email goes into your spam inbox. What else? you want to learn about the basics. So I have done on Investing Cube. I created something for you. Um, and under Learn to Trade, we have free beginner articles. And it's quite straightforward. Um, you can't see it here exactly because this is a computer screen like that. There we go. But it's like, what you know about Forex trading strategies, deeper look at technical analysis. So if you read this, it's going to give you a very nice overview. Each article is not very long. So you can see here. Okay, this one a bit longer. So we've written this. If you read all of that, I don't think it's going to take you more than an hour. You'll have a very good understanding of what trading is about more in detail. What else? I put that in the chat as well. We actually have free consultation because everybody's at different levels. So some of you already have a bit of experience, but you're missing the final bits and pieces. Or you totally green, you need something more specific. You don't want to waste your time, reading through a bunch of stuff that you might not need. And what we can do there is that you can actually schedule just a meeting with me, and it's a 15-minute meeting, and I can see if I can try to help you. And it's question forward, so I'm available every Tuesday, Wednesday, Thursday, usually in the afternoon. And you just book your slot. I get a notification, and I'll reach out to you because I don't have your phone number, but I will have your email and name. You can also, if this does not work, you can always just email me at alejandro.zambrano@atfx.com. There you go. What else? We have also what we call the ATFX Premium course, which is something you get with a live ATFX account. Looks like this. So it's about 4 hours. So you learn the basis of technical analysis. You learn how to spot a trend, advanced money management techniques, and then you simplify training with classical chart patterns. So remember what I told you before, how to maximize the likelihood of being a profitable trader? Educate yourself. You have a few links now, and we can also talk one-to-one if you want to. But then this is the important thing. You want to develop a proper trading plan. And a lot of the free stuff that is available online is just the basics. They're not going to give you that extra level of detail that you need, because nobody's going to give you, at least not for free, nobody's going to give you like, here are the instructions on how to make money, and then they're going to give it to you like that. It's not gonna be like that, unfortunately. Everything has a fee, right? Because unless there's like maybe someone holy, they'll give you something so you can make money unlimited, maybe. You get the picture, right? And that's why you need to have a proper trading plan. And what I've done here is that all of the mistakes that I've done, I got rid of all the mistakes and just talked about what actually works for me, and that is what I break down here. And it's something that comes for free with an ATFX account. Yeah, so that's a few tips that I can suggest to you. Now we're going to talk a bit about how to place a trade. So you will know now a bit on how you can actually trade using the MT4. There are many different trading platforms out there, but the MT4 is probably the most popular one available. It's offered by many different brokers. Now, before we do, I just want to show you a bit of trading terminology. So we're going to talk about entry. Entry level is where you buy. If you want to buy at 100, then that's your entry level. If you want to buy at 90, then that's your entry level. We're going to talk about take profit levels. So if you buy at 100, but then you say, I want to go out at 110, you can, in the system, just code it in, get out at 110, and then you can walk away, walk your dog, pick up your kids from school, or just enjoy a day out or wherever you want to do, not in front of your screens. And the take profit will sort that out. Then we have something called the stop loss. So the stop loss is the level where you want to get out of your position with a loss. And you say, I don't want to get out with a loss. Well, I get that. Nobody wants to lose money. But trading is always it's a battle between risk and reward. And you might like to buy Tesla today. Say to yourself, no, I want to buy Tesla. I really believe that what Elon Musk is doing, like Tesla is, by the way, is trading at 1,379 now, so not a cheap stock. Say you want to trade here, but remember what he's done in the past, right? What's he done in the past? He was tweeting, right? He was banned to tweet, uh, and because he said he had funding for the company that they want to be turned private, and the company went up, and then I think later he went back on Twitter again and said, no, that's actually not true. So you see, it's not easy. So that's where you have a stop loss. The stop loss is level where you go out. Who knows? You buy Tesla now, but then someone says the batteries in their cars are terrible. So the stock market plunges. So, or the stock plunges. So you're gonna keep it until it goes to zero? No. With the help of what we call technical analysis, which is when you look at the price of an asset, you can determine from which level you want to go out. And that's the stop loss. Leverage, we already covered. Now this might be a bit complicated for some people, so we're going to cover it as well. What is going short? Going short is another word of short selling, and it effectively means that you try to make money on something that is declining. So let me explain how this works. In its simplest form, you can make money when something declines. So for example, if the market is, sorry, just a minute. If the market is at, say it is at 100, and you think it's going to go down to 90, you can make money on that even if you don't own the asset. So what actually is happening in the back end? Imagine you go to your broker, you go to ATFX and you say, I want to short Apple. So they give you 10 Apple shares because that's what you want to have. And you take your 10 Apple shares and you sell them at the prevailing price of $100. Now, the broker doesn't care about the price of Apple. The only thing they care is that the 10 shares you borrowed, you need to give them back at one point. So you sell 10 shares for 100 each. So you have now $1,000, right? The price of Apple shares goes down to 90 and you buy them back. So you buy back 10 shares and 10 shares are going to cost you $900. So your $900, you buy them back and you give your 10 shares back to ATFX. ATFX got their 10 shares back. They're happy, and you're even happier because you made $10 per share. So that's how it works. That's how you can make money on something declining, and it happens all the time. You don't have to make it that complicated though. It's as simple as just loading your platform, which we're going to do now, and then effectively just click on the sell button. That's it. So let's do that now. I'm going to show you a bit on how it works. Let me just, there we go. Okay, good. So this is the MT4. So MT4, when you load it, many times it's just going to give you a limited set of markets. So you're not going to see everything you want from the very beginning. To do that, you can right click and you click on symbols and you can choose what you want to see, or you can right click and click on show all, and it's going to show you all the different currencies and combinations you can trade. Now this is a spread betting account, that's why it says SB in the bottom and in the end of it here. Now you can create these different panels if you want to. You can do one panel, you can do several panels. What it does is just show you the price of something. So this is a currency we're looking at, but I want to take a look at the price of oil. Actually, I want to take a look at the price of silver. Silver had an amazing day, amazing week, where it was trading around, it was trading at 18 and went as high as 19. That's a nice little move there. I bought myself a bit here from about 1843 for this little move. I'm still holding on to it though, so I can't count my chickens yet. It's probably going to take some time before it goes up, but it was a nice little floating profit at least. Now, this is a chart. It will show you, this is May 2017, the 27th of May, all the way up until now. Every little block is 4 hours, and it will show you the high, the low, the open, and the close price of that hour. If we want to make it even simpler, this is the D1, which stands for daily chart. So it will tell you the daily low, the daily high, the open, and the close. And what we're looking at here is called a candlestick chart. You can see this one is going upwards. So what I want to do now, I'm gonna be a buyer. So you can choose here how much you want to buy, or you can just double click here and you can choose how much you're gonna buy. And here's the volume. This is the product. Uh, and this means 1 ounce of silver versus dollar. So if I want to buy 1 ounce of silver, it's going to be $18.63 cents. I can put what we call a stop loss order. So remember what I said before. So for example, the market is at 1863. So I can make this 1860. Sorry, 18. And then, so that means if I buy 1863, if the price goes down to 118, the system is manually going to close it out. Again, this is important because as I said before, many people that start trading, they have no clue what they're doing and then they just lose their money. Then, for example, you have the I want to book profits. So I want to book profits at 118, not 119. So I can walk away now. I can go, if I have a dog, I can go out with the dog and it will deal things for me. Might not even have a dog. You might just want to go and don't want to be looking at the computer all the time. And then you click on the buy button. And remember what I said before, you can make money on this coming down as well. If you think that silver is at 1861 and you think, oh no, it's too expensive, I'm not going to buy that, I think it's going to go down, then you click on the sell button. Of course, you will need to adjust this. But if you're like me, you think it's going to go up, then you click on. So we now have an order in the market and you have that little line. Let me minimize this. You see here it says buy. So this is, I bought 1 ounce. This is my SL, which stands for stop loss. And this is my TP, which stands for take profit. And let me just check something here. Just a second. Yes. And if the market goes up to 19, I'll make money. If it goes down here, I will lose the money. Down in the bottom here, it will tell you the profit down here. So right now, when you trade, you always pay the difference between the entry and there's a difference between the sell price and the buy price. That is the spread. That is how a broker like ATFX makes his money. So that's why always when you open up a position, you start with a bit of a loss. Okay, let's spice this up a bit. So you see, as soon as I opened, I started out with 27 negative because that's why you need to pay the spread. Again, you see, I don't know if you saw that, but I bought for 10 ounces. The first time I bought for 1 ounce. So you can, this is where you come in with the leverage and you can understand how things work. So we're now have all these positions open. You see I have stop loss and take profit on this one. This one there's nothing, so I can double click and I can put a stop loss if I want to, like that. Let's see this moving a lot. You can do different things. You can put the price here immediately, or you can just put the number of points and then it will automatically, and I'm just gonna show you here how, I don't wanna actually trade, I just wanna show you. Because you see, I just bought randomly here. I didn't do nothing. Of course, I'm bullish and I think we're gonna go up. And we are going up a bit. So now I have them open. The first one here is showing me a bit of a profit. It's up with $1.2. I can close out parts of it, or I can close out everything. If I want to click here, yep, I booked that. You can look here at account history. I booked a profit of $1.80. This one is now going to my advantage. I still haven't made enough money to be able to pay for the spread. Let's open something else. So what's the euro doing? This is the euro USD, and the euro on the it's also going up now. It's quite interesting actually. This is the euro. So this is your daily chart, and it's trying to go up a bit. Let's see if we can find something else. Let's take a look at stock markets. The German DAX is popular with me. So not too much activity here this Friday. What's happening with the Nasdaq 100? The Nasdaq 100 is, as you know, been a bit crazy. It just goes up and up and up and up. I'm just looking for something to sell so I can show you how it works. Okay, this is the dollar versus the Japanese yen. So the dollar versus the Japanese yen, you can see this one is going down. And if you're like a trend follower like I am, you would look for opportunities to short sell. And you would use technical patterns on the chart to figure this out. Okay, I think we showed you a few things. What did I show you? I showed you how to open a position. I also showed you how to close. So here, let's for the sake of it, I'm just gonna sell. I think this is gonna go down. Okay. So I'm would double click here. It asks me, you want to buy or do you want to sell? Mr. Broker, I want to sell. How much you want to sell for? One. This is one here. It stands for 10,000 units. I don't want to sell for that. Actually, I want to sell for that. Let's sell for that then. You see the difference? 70 and 72. That's the spread. So when I click sell here, it's gonna show negative there. You see, dollar versus the Japanese yen, and I'm down with 1.1 pound because of the spread. And here as well in silver, I have still not made back the spread on that one. And then if I want to close, I close. Here, there's no stop loss on this one, so I can, okay. You know what, guys? Unfortunately, I would need to leave you now. So unfortunately, sorry about that. Have a great day, guys, and I'll see you guys soon. Thank you, and bye-bye.